Hello, I'm Dominic Morris, head of the senior living team at Gowling WLG. Today, in our senior living podcast series, I'm joined by Anthony Oldfield, a director in the healthcare capital markets team at Jones Lang LaSalle. And we're going to be talking about the findings of JLL's Housing with Care Index report, which Anthony and his team have launched this week. So, hi, Anthony.
Hi, Dominic. Good to be here.
Great to see you. Could you tell us a little about yourself and your team and the work you do?
Yeah, sure. Thank you. So JLL, who I work for, is a global professional services firm specializing in real estate and investment management. And it's a big firm, but within that, my team specializes in healthcare property. And we have a particular focus on care homes and later living assets, and the housing with care part is in that later living bucket.
Fantastic. And so today we're going to talk about your Housing with Care Index. Can you sort of introduce that to our listeners, what it's about, what its origins are, and what you're aiming to do with it?
Yeah, sure. Thanks. So we're obviously really keen to be producing research, quality research that helps our clients understand this part of the property sector. It's a nascent part of the property sector. It's growing a lot. But clearly investors, advisors and landowners, they need data if they're going to build more accommodation and invest. Because, so that's important to us. We believe the UK needs more of this housing provision that really benefits older people. So we produced a number of reports over the last few years, one looking at demand, saying that what the potential demand picture out there is in the UK. Another one on how to actually, so great, lots of demand, but how do I actually get into later living? What do I do? What is housing with care? All that sort of thing. So that's in our sort of how to deliver it report. Then interspersed in those, we've done what we call our Housing with Care Index. So that's now in its third edition, which we just launched this week. And the point of the Housing with Care Index really is to track the performance of the sector. So it looks at how the units are growing in value. And really, the point behind that, or the reason it came about, is because a few years ago, there was quite a lot of bad press over retirement housing and the fact that values are falling on resales and disgruntled families saying, well, hang on, Granny's paid 200,000 for this flat. I'm selling it 100,000. What's going on? So we wanted to look into this on behalf of our clients to see, what the resale performance was. And just to get a little bit techie at the start, just to sort of explain what we're talking about with housing with care, we're not talking about sheltered housing, which has been around for a long time. We're talking about housing which, so an older person will have their own apartment, and there'll be on-site amenities, including a restaurant, 24-hour staff, and a care provision on offer. And how we've done with our index is we've taken the Elderly Accommodation Council's definitions. So they categorise all the schemes that are targeted for older people across the UK, and we've taken their housing with care ones, which they subcategorise into extra care, enhanced, sheltered, and close care. So it doesn't include what they call the housing with support, which is your kind of your basic sheltered housing with a warden and a lounge. So we think there is a distinct between those two buckets. I know it's a bit techie if it's the first time anyone's come across later living, but it is important to understand that distinction.
It is probably worth saying for our listeners that much of this space is sort of self-regulated by ARCO, the Associated Retirement Community Operators. So their members will all fit into this housing with care model, but it goes slightly wider than that.
Yes, it does. Yes, yeah, you're right. All the ARCO members are in there, but there are others. So McCarthy and Stone is a good example. So they have some of their units would be classified as housing with support, and others would be housing with care.
Perfect. Okay. Our listeners probably don't need to be told, I guess, the demographic context of this, but there has been a recent excellent report from Octopus Real Estate on the opportunities presented by the sector and looking at the sort of the buyer retiree, if you like, perspective, but they're citing figures saying by 2039, 25% of our population will be over 65. And even now they have identified sort of potentially 2.5 million retirees who could be interested in buying into this sector and this space. So in that sort of context, are you able to give us sort of the helicopter view, if you like, on the findings from your index?
Yeah, sure, thanks. So yeah, one of the first things to note, I suppose, is that housing with care is the fastest growing part of the later living market. So there's more beds and units being produced in there than there are in care homes or housing with support. And we are seeing a bit of a trend towards a more high-end product. There's a lot of operators who are looking at London and in the southeast, and London has historically been really undersupplied. Very very few units at all being developed there. So that's an interesting trend. And I guess one of the key takeaways from what we've looked at is that prices in this market do increase over time. So and that's an increase we looked at over the last 5 years of 29%. So units have gone up by 29%. What does that mean? Well, if you compare that to the mainstream residential market, that's increased by 22%. So it's actually growing, or values are rising at a higher rate than they are in the mainstream residential market.
What are some of the factors behind that, do you think?
I think one of the key things in this is that with housing with care, it's generally built by operators. So they're not necessarily just in it to make a return on the property. They're in it to run for the long term. So yes, there's a development profit for all the effort that goes into buying sites and building accommodation and selling it out. But they want to run it in the long term, and that then aligns their interest with the occupier. So both parties have a vested interest in seeing the scheme developed, on capital expenditure being spent, keeping it looking new and well presented, and that seems to really hold values up at a high level.
And to what extent do you think a lack of supply is a factor in pricing?
Lack of supply is definitely a factor in pricing. We talked about that in our first report that we did. It's grossly undersupplied, and even within housing with care as a sort of a mini sector itself, about 60% of it is actually at the affordable end of the spectrum, built by housing associations over the past few years. So it isn't just flats for the rich. Most of it is affordable, but there is a real, we think, an undersupply for units that are for sale. Because if you look at the demographic of the older population, yes, there's lots of older people, but they have a significant amount of housing wealth. About 1.3 trillion pounds is the latest estimate in terms of what they have. So there needs to be more product available to service that market, and I think the fact that there is very little, is another factor in prices holding.
And it's worth saying is that in respect of that affordable housing provision, as you say, sort of 60% is affordable housing, but the vast majority of that is rental. So in terms of shared ownership product, be that affordable housing or private, the market is small at the moment, and there's a huge opportunity to grow that as well.
Yeah, shared ownership is only about 6% at the moment, so clearly has a huge opportunity to grow in that area, as does rental, but maybe we'll come on to that a bit later.
Yeah, great. So going back to this probably key principle that housing with care is an operational model, despite the fact it has a development arm to it, but the operating piece is absolutely critical to those looking to invest. A key to that investment decision is resale performance, and typically in this model that is underpinned by event fees. And operators have to think very carefully about how they structure and frame those. So what are you seeing in terms of the statistics in terms of resale performance?
Yeah, I mean that is a key part of why we did the index again, Dominic, as you say, because a lot of investors were saying, well, we understand this product, we understand selling apartments, and we understand the operations that goes into running them, but what's this event fee, what's this deferred management charge or fee at the back end, and how on earth do we price that? And so operators were saying, well, there's obviously a ratchet. The longer people stay, the higher percentage they pay, and that can be run, there's a value to that somebody would pay for. So, and one of the things the investors are saying, well, how do I know that prices are going to keep rising? If they fall off, then clearly the capitalization of those event fees is going to fall. So we wanted to show that there is evidence to suggest that resales do increase in value, so that gives confidence then to the investors that part of the business model, as it were, stacks up. So we very much focus on resale performance. That is the point of the Housing with Care Index, really. And this time round, as I say, we've done it twice before, but in 2020 resales showed that 71% of resales within the index increased in value from their original purchase price. Now that's actually a little bit lower than when we did it before, when it was 81%. And we think probably that's because we've expanded it hugely. So we trebled the size of the numbers of sales that we've captured in the index this year. And it includes a lot of other developers who are not part of ARCO. So it's spread the net very widely. If we just narrowed it down to just looking at the ARCO members, then 77% of those resales increase in value. Now you might think, well, 77%, is that good? Is that high? I think you questioned me on that once before, but you're never going to get 100% of units going up in value, because you've got to allow for house price inflation, and sometimes house prices go up, sometimes they go down. There have been various economic downturns, and Brexit has happened obviously during our index. And then also you probably need to allow for things like incentives. So when you're looking at a new build apartment, the operator developer will be able to offer some non-cash incentives to try and get the move through. That could be carpets and curtains, it could be stamp duty, it could be moving costs. And you won't get that on a subsequent resale, because you're obviously doing party to party on that one. And then there is always a bit of a new build premium as well for new products. So we would never expect it to be 100%. So 77% shows a good deal of confidence that these units do continue to rise in value, sale after sale after sale.
Yeah, and so in light, as you say, of all the economic, social and political issues, I guess, of the last few years, those are pretty robust figures still. Interesting is what you're talking about, that continual resale performance. And whilst I think it's fair to say there's been pretty massive growth relatively in the sector in the last, say, 5 years, Housing with Care as a product has been around for a good number of years, and some of the retirement villages or retirement communities are sort of getting on for 20 years plus. So we have got quite a body of evidence to be able to, I guess, track sales value by age, and that's something you've also done in the index. Would you be able to talk a little bit about that?
Yeah, so I mean, you say so the index actually covers 25 years worth of sales. So over the last 5 years, then the average price has gone up by 23%. It's 23% higher than mainstream residential. So there's that premium that they're getting over and above mainstream residential, and that's been fairly consistent over the life of the 25-year period that the index follows. So we also track basically that the growth rate indexed of Housing with Care against house price inflation. And the two lines follow each other very, very closely. So it definitely sticks with what's happening in the wider residential market, which again is a comfort to investors to think, well, if I think house prices are going to grow over the next few years, then I can be confident that my investment in Housing with Care will also grow at a similar rate.
And is it fair to sort of extrapolate from your statistics that they to some extent demonstrate the benefit of quality product, and perhaps in an evolving and a maturing market, operators now know what their customers want perhaps more than they did, and things are a little bit more tailored, more on-site amenity and those sort of factors, which all help to drive value? Yeah,
they do. I think generally speaking, older people are becoming more aware that this is an option. And it's something there's more awareness out there, and that obviously helps with generating demand.
Great. Performance by regions. So you've touched on sort of some of the high-end schemes that are coming through in London, which sort of driving numbers in that region, but even London has got some definite sort of supply challenges. Are you able to sort of characterize from the statistics you've looked at as to what the picture is nationally, London, South East, and more widely?
Yeah, we do track regional performance as well as the national. And interesting you should mention London, because there is quite a big regional variation, and in London 92% of units that resell increase in value. So that's actually the highest performing region of all. And I did say that it was fairly undersupplied in terms of units within London, but there are over 1,000 in our index that we've looked at. So next you've got the Southeast, which is 81%. So again, I guess not surprisingly, a lot of operators are focusing on London and the Southeast and areas where house prices are higher, because it makes the economic viability of the scheme easier to stack up, and they know there's plenty of downsizing potential in those markets. So that is a lot of effort recently, I guess, has been focused by more new operators coming in, and therefore that's probably partly why we're seeing that growth in unit price in those locations.
Great. I think the focus, obviously, of the Housing with Care Index is sales, so properties sold on long leases, typically. Yep. Again, there is an emerging trend of rental coming into the senior living, later living space. So how do you think that plays into the analysis? What are the future trends, do you think, for rental, and what's Jones Lang LaSalle going to do to be capturing that evidence for its Housing with Care Index going forward?
Yeah, we would very much like to next year do one on rental as well, or include rental in the index, because it's a very much a growing part of the sector. We did a very short survey of operators who function in this space, and we said to them, look, what do you think in the next 24 months? What percentage of your units do you think are going to be rental? And the conclusions that came back did surprise us, with about 25% of them coming back saying that they think that between 25 and 50% of their units will be rental in effectively 2 years' time. And that's a seismic shift to where we were before, with a lot of operators saying, oh, we're definitely not doing rental, there's no demand out there, or people don't want to rent, they want to buy. Englishman's home is his castle, that sort of thing that gets tripped out a lot. So yeah, that's a big shift. Most of it at the moment is pepper potted units within existing schemes, and I think that predominantly has been driven by people coming through the door and saying, well, I really like this accommodation, it's really great, but actually I'd prefer to rent it rather than buy. And then operators have been scrabbling around thinking, well, can they rent it? I don't know, what would it be? And actually, the more that's happened, the more it's grown. And McCarthy Stone have just done a big rental portfolio. They've seen a huge upsurge in demand for rental, and it's been other operators, smaller operators, are definitely following suit. So there'll be plenty of data to capture on that. In a couple of years' time, we'll monitor, voids and rental uptake and rental growth. And I think there'll be more operators who will perhaps take that brave step of moving away from just pepper potting units to actually doing a full build to rent retirement scheme, a bit like Birchgrove or Hawthorns.
Which to some extent is arguably a simpler model to operate, because when you're trying to graft a rental proposition within an existing sort of long lease proposition, both in terms of running the numbers and also in terms of how you actually operate the units and how you charge for what you charge for, it can get pretty complicated.
Yeah, certainly makes a valuer's life very difficult.
Great. Okay, so that's, if you like, sort of the backward looking piece of the Housing with Care Index and the findings, which are all, I think, pretty positive across the piece. So to wrap this up, would you be able to sort of future gaze for us, look at some of the key trends that you've seen coming across the index and where you think the market is going over the next, say, 5 to 10 years? Yeah,
absolutely. There's probably one other thing that I probably didn't mention, I should have done in the index, is we also look at the average hold period between sales. So, because that's obviously quite key. So if you're running an event fee model on a for sales basis, you want to know, how often are your units likely to resale. And in this year's index, it's 5.1 years is the average period between resales, which will probably surprise some people who are perhaps well read in the sector and think, well, hang on, surely it's 7 to 8 years, isn't it? That's what everybody talks about. I guess our working theory is that perhaps the average will increase over time, because there's a number of units that haven't resold within the sector. If you had somebody within our index, somebody who's been there a long time, as that unit resells.
You quoted about 30%, didn't you, of units that haven't been resold yet?
Yeah, I think that's right. So then we will expect that average to go up. But I do think there's an element of, we're seeing older people, if you like, moving in, late 70s, early 80s. So perhaps, this isn't a market for 65-year-olds that are going to be there for 20 years. So that gives investors, again, an indication as to sort of help with the modelling that event fee.
Yeah. So the issue is, I guess, on that the event fee has to be structured to peak at the appropriate time. So if people are moving out after 5 years rather than 7, that needs to be factored in.
And it definitely is a consideration. Yeah.
Great. No, that's a good point to bring up. So in terms of this as, say, sort of future gazing piece as to where you see the sector going in terms of size, new participants, and then generally how housing with care is going to sit alongside care homes, which are obviously a valued and important part of the market as well, and sort of more general retirement housing at the other end of the spectrum.
I think it's probably a good place to start, really, that where does it sit? Because if you look at the care home sector, which is, we do a lot of work in that, it isn't actually growing in terms of total bed numbers. So, year by year, you'll have new care homes built, absolutely coming online, but you'll have older, poorer stock dropping off the end as well. So overall, the number of beds, it's about 470,000 in the UK, has remained pretty static. So, but obviously over that period of time, the older population has increased quite a bit. So what we're seeing in care homes, and I expect your clients are seeing this as well, is there's a higher acuity of residents. So then people are moving in later with higher levels of need, particularly dementia. So you've got a whole cohort of older people there who aren't perhaps considered eligible for care homes anymore, but do need a bit of support and a bit of help. And that's where I think the housing with care really, really kicks in to fill that gap between perhaps living in your own home, which is becoming unsuitable, and not being ready for a care home. And this is where I think that we're going to see a lot of growth in the next few years in this. So I expect in 5 years' time, the size of the market to be much larger than it is now. Planning pipeline is filling up with operators with big aspirations to build lots of units. IVG and RVG have made big announcements about the number of units they're going to be building in the next few years. So yeah, one thing is it will be bigger than it is today, but the older population, like you stated at the start, is going to also be a lot bigger. So there's plenty to do. And I think that will attract a lot of new entrants and a lot of new participants. I mean, we're seeing care home operators coming and saying, well, hang on, we could do this. We could do some housing with care. People have been in hospitality, stepping in, thinking, I know how to run hospitality. I know how to run good services, good facilities. So this is a sector that we could work in as well. So I think we'll see, a lot more accommodation being built. And I think again, there's no homogenous model. It's not like everybody is doing the same thing. If you look at the ARCO members, for example, they're all different in terms of, price point, the market they target, structure of how they run their businesses. And I think we'll see greater diversification in that as well. And I think you mentioned it earlier in terms of shared ownership. I think that could be a really big opportunity for somebody to come in and try and crack that mid-market nut, and shared ownership could be a one to watch, I would say. I expect we'll see more operators coming in doing that.
Fantastic. And to some extent, it feels to me as though the market is ready to snowball. You almost need the schemes to demonstrate proof of concept. And we've spoken about a number of schemes which are now established and are doing extremely well. And in a sense, you need more of those to be I guess, flying the flag for housing with care, so that the consumer actually has a good example of the product and the concept in their locality. And it's only when you start to generate that critical mass that the momentum to really sort of kick on will come. And hopefully, and I think the publicity the sector's had, which is generally positive publicity over the last year, will help to sort of give that a shot in the arm.
Yes, I think a lot of our operator clients have done very well at looking after their residents, during the pandemic, and it's definitely helped combat loneliness and a number of other factors, which I think older people will be aware of, and it'll be a good choice for them going forward to move into these schemes, I think.
On that positive note, that's great. So thank you very much for that insight into your Housing with Care Index. So our listeners, I would fully recommend having a look at the index itself. Some really interesting graphics there, which probably a whole lot more articulated than certainly me and possibly Anthony. So Anthony, where can they find that report?
So the report's available on JLL UK website. If you go on there and you search for Housing with Care, you'll find it. Or you can email me or message me on LinkedIn, and I'll send you a copy.
Thanks very much, Anthony, and thank you to our listeners.
Yeah, thanks, Dominic.